everyone. Welcome to Frontrunners Innovate, another good episode with yet another familiar face. If you've been watching the last few episodes we've been doing with League Med, this is Paul Cella, and you'll get to meet him in just a few minutes. I'm Mary Keurig, your host, and this is a podcast that we do with my business called Frontrunners Development. It is the business that is the producer and publisher of this podcast. Paul is managing partner of KeyArx Group. And this was founded in 2007 to deliver unique solutions and programs not readily available in the open market. And I think that's a teaser for you so that you can start to think about what would that mean?
Right.
All right. So he has 30 years plus of experience in financial services, and Paul is recognized throughout the industry as a thought leader. He's been featured on Medical Economics and the Deserve podcast, C-Suite Impact, the largest consultant to CPA firms in the country. So Paul has his tentacles into different industries. You're going to find that out in a few minutes. We're going to let him give you a broad view of KeyArx first and dive down into some of the details of it. So Paul, good to welcome you back in yet a different hat.
Right. Thanks for having me, Mary. I appreciate it.
Yeah, so give us a little bit of an overview, because when I was starting to look at this, this podcast, I had my mind totally in the vein that I know you and have been working with you at, and then I start to see other places where you fit. And so this is going to be as educational for me as it is going to be for everybody else listening. So
there you go.
You go.
So thanks for having me on. So you wanted just a quick overview of KeyArx? So, as you mentioned, 30 years, I can't believe it. Time flies. I feel like it's like that Romancing the Stone mudslide, going down the hill. But anyway, I'm the managing partner of the KeyArx Group, and we are a financial planning firm where my focus is on the insurance side of most items. And what I do with professionals, I help them in a number of areas, but my top three areas are protecting their biggest asset, and it's finding inefficiencies in the owner of companies and their companies, finding the inefficiencies on wasted dollars and helping them recoup and save money. And then what I like to say is I create peace of mind for individuals, high income individuals, and peace of mind in retirement. So those are the top three areas I work in. And then you mentioned unique programs. I have my setup at KeyArx first I'll talk about the benefits a little bit. Our benefit area, we provide benefits to the second largest spend in a business owner's life is on their benefits, out next to salaries typically. And we have a model where we typically can deliver 20 to sometimes 40% in save in those areas, which is a big deal. And then we have a unique model how we deliver that, which I can get into. And then we just, as I mentioned in the second area, we just focus on inefficiencies and things that people already own, Mary, and they just don't look at it. There's items that people put in a drawer and don't look at them again. And we have a wonderful way of reviewing those items to seeing if we can dust them off and make them better without spending more money, squeezing more out of the grape. So those are the main areas.
Well, in the work that I do, we love innovation, and that's kind of what this podcast is all wrapped around. But sometimes innovation is not, disruptive technology. It is taking what's out there in terms of systems and processes and turning them or flipping them in a way that you can look at them differently and then utilize them differently to be able to save people lots of money. And I thought when I first met you and heard about what you were doing, I thought, this is fantastic. Nobody is thinking like this. Nobody thinks like this. When you first brought this up to a hospital that I know,
right.
I think it blew them away. I don't think anybody knows how to think like this. So I appreciate that side of you. And to me, that's innovative when you can start to, get people to open their eyes and look at things differently. So why don't you give us, a colorful example, if you will, so people can start to visualize a little bit about how you work in that particular vein.
So what I'll do, I'll start with the benefits and how we save money there. And, one of our joint colleagues brought up this word to me, we get rid of the bloat, in expenses. But with benefits, our focus is we start on the ancillary, which is the short-term, long-term in life of a group. And why we can deliver what I'm going to say, the 20 to 40% in savings, is that we're unique in that I'm what's called a general agent. of the major carriers that provide benefits in the United States, the Unums, the Suns, the Hartfords, all these quality companies. But we get paid from the company direct, Mary. So we avoid commissions and we don't charge fees. So we can avoid those. And that right there is a wonderful savings tool for the end user. But also what I'm called in on is on design, and how we design plans is as important as what they have currently. And then, you look for examples with our model. I had a hospital recently, a little over 15,000 employees, and they had a 6 million spend in the areas I just mentioned. And through our process and structure, we were able to save them $1.9 million on a 6 million spend. So that comes out to 34%. That's embedded in my brain. But it's just in the structure, and then it's also a lot of it has to do with the way we design things, Mary, and we can bring down costs. Our goal is not to disrupt the company, change things. It's what do you have? How can we get rid of that bloat? And then what can we do design wise to make it more efficient? And then we have a 90+% success rate in those areas.
And then keep the benefits at least.
Keep it the same, or the goal is keep it the same or increase it. Sometimes I'll use a rural hospital. I did this in Arizona with about 260, 70 employees, and they had a 256,000 spend in the areas that I mentioned, and we wound up saving them $71,000. But I said to them, their goal, they were having a retention problem, Mary. So I said, hey guys, I know my mandate was savings, but you told me you have retention problem. If you can give me 20 of that back and walk away with 50 savings, I was able to increase their benefits 75% to the executives and the C-suite and the doctors. So, it's if you redeploy things, we made it better and we treated it as an executive benefit in that case. So that's
a huge problem for hospitals across the board, is that retention or recruitment in a lot of cases.
So it's savings is, some hospitals just, Paul, save me. A lot of them are in having problems. So it's bottom line savings, but a lot of them want the retention, the attraction, retention, reward type thing.
When I was introduced to you, I've never met anybody like you that does what you do. And I was told that you are unique. Are there other people out there that do what you do? And this clearly is a differentiator. I think what you're talking about, how you do it.
I'm not going to say I'm the sole person. I've come across a handful of people in 30 years, literally a handful. So the general agent status that I mentioned to you, 100,000 brokers out there.
Yeah.
And with some of these carriers, like one of the major carriers, the lead one, has 18 general agents in the entire country. So I'm one of 18. We also have trusts. I have 2 trusts that I'm partnered with. One trust is a healthcare trust that has over 1 million healthcare lives in it. 1 million people are in it. So through that trust, I'm able to get rate locks for the companies 6 years, where the industry average might be 1 or 2. So think about the rate stability for the CFO, that you can get rate stability for the company. And then there's renewals that are, when the renewals do come up, we're getting 0 or maybe a 5% increase, where the industry average might be 12 or 22%, 12 to 22. So when I say the unique and a handful of people, I don't know many people that are general agents and have access to trust that can do unique things. So that's unique.
Yeah.
That's pretty exciting.
That sort of leads us into, I think, the conversation around physicians themselves as individuals. So tell us a little bit about what you can do for them.
So the physicians, and I love working with them. They're extremely smart people, affluent clientele, and they have big needs. I mean, the first thing we do is protect their biggest asset. Their biggest asset is the ability to make an income. And doctors buy more disability than anybody. They want more coverage. They just don't want to pay for more, right? In our model, we can show them how to get more coverage without spending more through the group benefits, which I just mentioned to you, why we could save and redeploy the monies. And then inefficiencies, whether, I'll share with you, Mary, what we do, but I didn't want this podcast to be all about, oh, you got to come to me. No, this was to share with your people what to expect from your advisor. So the second biggest area we have is we take stock in what they already spending money on. So most doctors will have cash value life policies, and they don't look at them. It's a big asset they have. Some doctors are taking 25, 50, or 50,000 or more per year into these policies. They're growing without tax, coming out tax-free. So it's a huge asset they should build into their retirement plan, but they buy it and stick it in a drawer and don't look at it for years at a time. It's crazy to me. It's like having a 401k with $1 million and not knowing your return after 5 years. It's crazy. What I share with them and what I would encourage the doctors that listen into this, go back to your advisor, get in-force reports from your company. We get the in-force report, which brings everything current, taking stock. And if I could I'll give you one example of a surgeon I have in Manhattan just did this. He's got two of the top companies in the United States. So I'm not disparaging the companies, but he hasn't looked at it in over 19 years. So he had 4 policies that add up to about 5.2 million of death benefit. He was putting in 42,000 a year of coverage. And I'm just sharing with you this story. This is why you should look at this. Okay. He's paying 42,000 a year approximately. And then his goal, he's 65. His goal is, Paul, I want to start taking income at 70 to 100. The policies were yielding a little over $161,000 of income, tax-free income. Now that's a big income stream that you want to build into your retirement plan, right? Well, because people are living longer because of health and medical advances, Mary, the cost of insurance have come down. So it's better for the client as long as they're still relatively healthy. Because costs have come down, I was able to secure 5.9 from 5.2 million in death benefit, freed up the 42,000 in payments, no more payments for 5 years. And his income, because of lower expenses, was 220,000 and change a year, 60,000 increase per year, and not spending the 42 grand. So I would say that's a big asset you stuck in your drawer, and take it off, dust it off, have your advisor look at it again and say, hey, is there something, what has come, what's out there now and what can be done? And the new policies actually allow him to tap into the death benefit for long-term care. So he was almost scratching his head. And here's again, a surgeon in Manhattan saying, Paul, why wouldn't I do this? This is crazy. This is awesome.
But they're so busy doing what they do, they don't think to look at those things.
Right. And it's not just the doctors, it's any professional. People just don't look at it. And but it really is an inefficient area. And then, the last thing that I suggest is you take an asset like that and build it into your retirement plan with your Social Security and your real estate and your K and your profit sharing.
Portfolio.
Right. And then, giving peace of mind, have the last thing I would say to expect from your advisor is force your advisor to give you a retirement plan. And I want to know my number. I want my income number in retirement. And when I said peace of mind earlier, I've had some of the most sophisticated people, affluent people, but you see it in the spouse and the both their faces just, it's a big concern. Am I going to have enough money? How, am I going to run out of money? What am I going to leave my kids? And these are problems, or these are issues people want to tackle, but take stock in what you have and go through the drills. It really makes sense.
Well, let's step aside from the medical space, if you will, and tell us where else this fits.
What other occupations?
What other industries or spaces do you work in where you have examples that you can share?
So, whether it could be school systems, universities, gig workers, we have the trusts allow me, the gig workers, it's only 70 million plus people now, Mary, 70 million gig workers out there, right? It's the biggest growing portion of the population. 1099 people, they have trouble getting benefits, or if they get benefits, they're paying top dollar for them. So the trust that we have that I partner with, it's good in all 50 states and Puerto Rico, and it allows a gig worker to access things that normally aren't off the shelf, that they have a hard time getting, or we can, with the trust, we can pull tens of thousands of lives for the 1099 worker and get economies and pay what a big IBM or a big, Philip Morris would pay, or, J&J would pay on their benefits because they're so big. So they, little guy or gal can benefit from that and have access to pools of people, if that makes sense. And then, you ask for, unique things. So the trust, in my opinion, is extremely unique. There's very few agents, brokers that know about trusts and how to utilize them. Affluent people, we have, people that have estate planning issues, right? We have programs and access to programs where we do what do wealthy people, what do they love to do? Use other people's money, right? So we have affluent people that have a need for big amounts, I call them jumbo amounts of life insurance, where we can, let's say somebody needs 10 or $15 million to not give it to Uncle Sam at the end of the rainbow, right? So they could pass the assets to the kids. They may have a big need for life insurance, big premiums, and they don't want to pay those premiums. So we're working on a client it's about $850,000 of the cost for the premiums for a big policy, but let's just round it up to $1 million for easy numbers. If you had a premium of $1 million for 10 years, well, you're going to take 10 million out of your pocket. That's expensive, right? We get loans from banks that put up to 10 million, and you just pay the interest on the 10 million. I'll give you the short, simple version. So I could secure that huge death benefit for about $3 million of cost versus 10, and using the bank's money to fund the premiums. And then when these policies build up, there's a point where you can pay off the bank and you're left with the residual, which is always greater than the 10 million that you wanted for your estate. So there's programs like that for the affluent. And, so we focus on the professional, we focus on that affluent person that has different needs and has, and what's available in the market, and the average bear just doesn't bring that to the plate.
But, back to like corporations,
Mm-hmm.
you look at, like with hospitals, it's easy enough because if they're big enough, then they have plenty of employees that are usually on plans when you're talking about the insurance, the benefits that you were talking about a while ago. But literally, as you mentioned, universities and some of these other entities, so the corporations out there that might be listening to us, name some more of those types of entities that might benefit so that they can self-identify.
Yeah, so it could be any service organization.
Nonprofits?
Nonprofits, absolutely. For-profit, nonprofit, professionals, where the executive class is making, if people are making north of, I'm going to give you an example of a $500,000 example. If you have a couple executives making 500,000, the typical benefit design that a company may have is 60% of your salary to, let's say, $10,000 a month of disability benefit. That's a typical design sold by the health guy or gal who does a great job at what they do, but they don't know the ancillary well, typically, right? So if you're making $500,000 and you have a $10,000 capped benefit, that's only 24% of your income covered. So the person answering the phone has got 60% of their income covered, and you've got 24% of your income covered. How does that make sense? Right? So with the professionals, or whether it's accountants, attorneys, it could be a widget manufacturer, but our focus is on the inequity with the executive suite. So it doesn't matter, Mary, profit, nonprofit, widget manufacturer, or surgeon. It doesn't matter, all the entities. But when you have a business owner, he or she typically is making that 500 or more, yet they don't have benefit that reflect that income. The benefits are for the masses. And, and that's probably one of the biggest things we uncover is the inequity of design.
Well, I want to mention that because there are people that will be watching this with interest that are outside of the United States, but they probably will start, their wheels are going to be turning like, how can we do something similar?
Right.
Yeah, they're going to be like, how can we get creative with something here?
My benefit, one of my health benefit partners they're located, it's a large benefit firm. They're located in 70 countries. So we have business outside of the US.
Okay.
And so we can help. We have some companies we're working on.
Australia.
Yeah,
all
over.
Okay, interesting to know. So those of you who might be listening in those places, pay attention. But for the most part of what he's talking about, where he's located, where Paul's located, is in the United States. So just so that you know. But anything else you want to share with us? KeyArx says you've got some great videos and things like that you have, I think, on your website. Tell us a little bit more about what else you're involved in and how to find more information.
Well, it's, I have a YouTube channel, KeyArx, KeyArx. You can look that up in YouTube, and we have, as Mary said, a number of videos on different topics, and we're always adding to them. You mentioned where else, we're partners. I'm one of the partners at LeagueMed, which you've had on your podcast here, which is a wonderful company that I league, like baseball league, League Med,
Yeah.
and we help fund innovations in healthcare, new companies coming to market. That's so leaguemed.com. We can go there. You can go there also. But yeah, the website is just keyarx.com. And then you can find out, if there's information you want.
Well, before we finish up, I wanted to bring this up, and I thought about it and then forgot and came back again. How easy is it for people, like say you're a CEO at either a hospital or some other company, to engage with you? How much effort are they going to have to put into helping you to help them?
15-minute phone call, 15
Okay.
minutes.
Well,
Yeah,
see, that's what
that's it.
I'm sure a lot of people envision, oh my God, I'm going to put a team on that's going to be staff involved for
No,
months to dig up
and
information. And
I actually have people ask, compensation, how you get paid with the benefits and such. And it could be, one is people hire me to be their broker, and then there's no fee for that. But the other way is a success fee. We have a savings. So if we find savings, we have a success grid, and we could say, hey, we're going to we get paid X amount. The more we save you, the more we make, the more you save. It's a wonderful model. And then the larger entities you have, I would say larger, north of 500 employees. If anyone wants, I have a system where most benefits are public information through what are called 5,500 reports. And oftentimes we can go into a company. I do this for a lot of the universities and a lot of the hospitals now because they're hurting in this market. We can look up their public records and see how much they're spending on certain areas. And I can give a CEO, CFO an indication of potential save right up front. And most C-suite that I deal with, they love that meeting before HR because they want to see the big picture on what could be saved. And if they go to HR, we could save money. Oh, we got that under control. Well, I show the CEO, CFO, hey, this is what you're spending, and this is the track record. This is what we could potentially do. Here's a good indication of what you could save. And when you start seeing some of these corporations and you start throwing around, I'm working on a big system, 32,000 employees in PA, and they lost a significant amount last quarter. But we're talking about 12 million in save on their ancillary and on their health through this international company I work with that I told you about or mentioned. They're confident they could save over 40 million on the health. So, the savings potential could be large with these companies, and they just, don't look at it.
This is interesting because, where my mind goes to the bigger corporations, a lot of them have employees and branches in different countries. Headquarters might be here, but they might have different, locations. You mentioned Philip Morris, and I know that there's different places for that around the world. But they probably get paid from the Philip Morris headquarters, I'm thinking. And so therefore, I'm wondering if benefits could also come from there and how that dealt with that sort of scenario.
Yeah, a lot of the international companies have U.S. benefits and then the other domiciles where they are, and they'll have different benefit setups, for Canada employees or UK or whatever it may be. But, that's the partners I deal with, and even on the property and casualty side I deal with global partners that can handle those multiple countries, which is important for these big companies.
It is. Very cool. I mean, my mind goes to, the automobile industry and all kinds of places where they have massive, because they have several shifts of workers and, all that sort of thing. So,
well,
anyway.
the automobile, those are good for the trust that I mentioned earlier. There's the automobile industry typically, and there's certain industries like restaurants. They don't give the richest benefits because they have more of a transient worker flow, or and they don't have the spread, the profit margin there to provide richer benefits. So the trust winds up being a nice area where employees can get into stuff on their own dollar, but a discounted rate that the employer can add and add, big company benefits, but have it discounted for the employee.
Wow. This is amazing. Got my wheels turning once again. Thank you very much. And so if you've got mine turning, I bet there are people listening that also will have theirs turning. And then, of course, I'm going to be sending this link out to a bunch of my folks. as well as it being available on our usual channels. So I encourage everybody, go to keyarx.com, right? That's the website link, and check it out. He says 15-minute phone call and you're ready to go.
What more could you want, right?
Yeah, you're ready to rock and roll. And if you're a physician listening to this, you definitely want to have a private conversation with Paul and see where that might help you. Dust off, as he says, some of those documents you've got in the drawer.
And the only criteria that I ask for anybody that calls for Mary is you say you came from Mary.
Yeah,
That's
okay,
it. And I'll take care of you, because Mary's my friend, and I appreciate her very much. So
thank you so much, Paul. It's been a delight, always is, and I'm happy to see where this can go, because I'm a big fan of saving money anywhere you can, and also enriching people's lives same time. So
you're the best, Mary. I appreciate it. Thanks so much for having me on. I hope I brought some ideas to the table for people, and I know I spoke about what we do, but I encourage people to challenge your broker, challenge your people, and because there's so much, don't let things lie, just
ask
take a little
questions.
bit of time.
And now you know that you not only should, but you have some idea of what questions to ask, which is good.
So thanks again, Mary. I so much appreciate it.
Take care. Until next time, everybody. Happy front running. Bye.